Well, welcome back. Now, as we've been saying, markets have been obsessed with a Fed liftoff for the last 18 months, and it's finally here amid a change backdrop, a war that sent commodity prices even higher, also a sell-off in the markets. Now, let's get perspective from Indonesia's Finance Minister, Sri Mulyani Indrawati, and Philippine Finance Secretary, Dominguez. Thank you both for joining us. Minister Sri Mulyani, let's start with you. It is about inflation. It is about surging commodity prices. How do you see higher inflation pressure building in 2022 for Indonesia?
Well, first, for Indonesia, even last year, we have the inflation, which is relatively very mild, 1.6%. January and February, we have a little bit increase at slightly above 2%. If you compare with many other advanced country or even emerging country, this level of inflation is still relatively very low. But we are very mindful that the global commodity price and supply disruption, even before the Russian invasion to Ukraine, is already creating a pressure on the price. And that can be seen from many of the advanced country inflation rate and some emerging country, which is already increased quite significant. And that definitely will have to impact first, of course, the response on the monetary policy in many advanced country in terms of tightening. And then the second one, of course, with increasing inflation, it will also affect the purchasing power. So it will affect the consumption-driven recovery. So these two effects need to be responded as well as anticipated. For Indonesia, some of this commodity price increase has not been transmitted into consumer price because administered price policy by the government. Some of it is also explained by our relatively stable food price like rice, which in the past 2 years has been very fortunate with continuous rain. And that's also creating a buffer for us. But we are also very vigilant with, for example, like other food price, including cooking oil and soybean, as well as now wheat because of this Ukraine, the war in Ukraine, that will have some significant impact for some commodity in Indonesia. We've already made calculation. There is certainly pressure on this price to the inflation in the next couple of months, and especially also for Indonesia, because we are anticipating to have a Ramadan and Eid, which is going to happen in the next 2 months. So seasonality, commodity price definitely will have a potential implication to the recovery process of the economy in Indonesia. But the government will use our tools, both fiscal, monetary, as well as even intervention on the market in order for us to be able to first making sure that the recovery process will continue. The second, try to mitigate the impact, the negative impact of this extreme increase commodity, including oil, fuel, as well as mineral, using our fiscal tools. And the third one is to make sure that the availability of this goods and services is going to be there when the demand is going to improve or increase with the recovery process after the pandemic. So we will use all the tools in order for us to navigate this very challenging situation from the both pandemic, which is not yet over, as well as now the new geopolitical risk.
Secretary Dominguez, how is the Philippines looking at inflation? Might your 7 to 9% growth target be at risk?
Well, basically, as I said, we came out of a very good last quarter of 2021. We grew at 7.7% year on year. And for the full year, we grew at 5.6%. We were basically taking off already since our infection rates from COVID are well within manageable levels. However, this conflict has hit us in basically 4 channels. The first is through the commodity markets, as Sri Mulyani has said earlier. Prices of commodities, oil, coal, wheat, corn have risen. We have seen also disruptions in the financial markets, with interest rates getting a big boost from the crisis. The interest rates were already rising. Third, we are looking at a possible slowdown in foreign investments. Last year, we had the highest foreign investments we've had ever, at over 10 billion US dollars. And we think that, this crisis is going to make people, particularly in the West, who are planning to invest elsewhere, think 2 or 3 times. And of course, the fourth channel is the effect on our fiscal space. We are definitely looking at mitigating the effects of inflation. Our inflation rate for the first 2 months of this year was exactly in the middle of our target, which was 3% over year on year. And we think that this inflation rate will this crisis will push our inflation rates quite a bit higher, but we are ready to tackle this. We're going to mitigate the effects on the poorest members of our society by providing subsidies for the poorest 50% of our households, as well as subsidies for public transportation. We are also looking at the different monetary tools to address this crisis. But again, it's very unfortunate that this crisis is coming right after we are just quite getting over the COVID pandemic. But fortunately, the Philippines has a lot of tools similar to what Her Excellency Sri Mulyani has mentioned, and we will use all of them to ease the effects on our population.
Secretary Dominguez, JP Morgan says that an escalation of the war in the Ukraine and that commodity shock may shave off about 0.4% off your GDP target. Do you agree with that assessment?
Well, we are taking a look at it right now. It all basically depends on how long this crisis is going to last. The longer it takes, obviously, the worse it's going to be for everyone because of the uncertainties in the commodity markets and the financial markets. So we're taking a close look, and we are looking at the possibility that this crisis will end soon, although we realize that there's going to be a bit of a long tail in getting back to normal again.
Minister Sri Mulyani, talking about the impact of higher commodity prices on your budget for government subsidies, could this push the budget deficit higher than the expected 4% of GDP this year?
Well, last year, our fiscal consolidation is actually accelerated much faster than what we originally designed. 2021 budget year, we end up with a fiscal deficit, which is 4.6%. This is almost 1 percentage point lower than what we initially planned for 2021. This year, of course, the revenue side, which increased 21% last year, on January, the growth of our revenue is even close to 55%. And spending side is relatively steady. Last year, our spending only increased by 7%. And that's why we have such a very good deficit outturn, which is much, much stronger than what we initially. This year, we are going to expect the same trend. On the revenue side, as I said, by January, it's already increased by almost 55%. And that's contributed both by tax, non-tax, as well as the excise. And this is a good start for 2022. And until February, we still see the revenue growth is still above 20%. On the other hand, the spending side in the first 2 months of this year has been relatively very mild. The growth is almost even zero. So we are actually having a surplus on our deficit. We are very mindful that the rest of the year, that is the next 10 months, due to this geopolitical situation, that we are going to anticipate quite a lot of pressure, especially as I said earlier, as well as Minister Dominguez earlier mentioned about the commodity price. Some of them will be passed through to the consumer in reflecting by the price in the market. Some will be absorbed by the government, and that's in the form of subsidy. So there are two response from the fiscal side. There is an increasing subsidy, especially on the fuel, electricity, but also to some extent, the food price, like the cooking oil, that we are using the revenue coming from the CPO increase. So we use this combination. But some commodity, the pressure on the price will be passed through to the consumer. And that's why we are expecting slightly above inflation. Now, in terms of the fiscal consolidation and the posture of our budget 2022, before the extreme increase of the commodity, we actually expect, because of very strong performance in 2021, we actually expect for this year, the deficit is even declined further to slightly below 4%. But of course, with this situation, we will see that the deficit may be a little bit widened, but you have to be very also remember that our budget this year, according to the law which is passed by the parliament, was designed with the deficit around 4.8%. We will expect that this the achievement of our deficit will be lower than this, maybe even not slightly, but significantly lower than that. But the composition is still subject to what response of policy, especially during this very uncertain and dynamic situation. The strength of the Indonesia economy and response in the past 2.5 years during this pandemic is because we continue maintain fiscal flexibility. We can refocus and reallocate the spending in a much quite fast and timely way because of the approval of the parliament. And that's been very effective in dealing with the uncertainty, whether that was due to the pandemic and now due to the geopolitical situation. So flexibility as well as the agility is also very, very important. On the other hand, the fiscal space is going to be continued, maintained, or strengthened. Right. We do understand that this is actually an exceptional time for all countries in the world, but Indonesia in a relatively good shape on the fiscal side.
Consumers on the receiving end, and we know that at some point, companies will have to pass on the cost to consumers. Is there a need, Secretary Dominguez, to perhaps suspend or adjust tariffs on certain types of food, commodity imports? Your thoughts on that? Of course, this is to contain inflation.
Well, basically, we had a long discussion. Excuse me.
Go ahead.
Basically, we had a long discussion on this matter, and we have decided that we will not suspend the tariffs on fuel. However, to ease the potential inflation on food, we are going to drop tariffs on food items that we import. Basically, we entered into the pandemic as well as this crisis from a position of strength. Since 2016, we have been very active in reforming our tax system. We have actually broadened our tax base, increased our collections of taxes as a percentage of GDP, and we have spent quite a bit in our Build program. So we came into the pandemic in a strong position. And as the pandemic ended, we also we actually passed 3 very important bills liberalizing our economy. And this will stand us in good stead as we move ahead through this crisis due to the conflict in Ukraine. One of the biggest items that have supported us is our rice tariffication program, where we have basically taken out the price of rice from the inflation figures. Rice has been very steady, and even prices have even dropped. And it's no longer price of rice is no longer a driver of inflation. So we are looking at this again, as I said, from a position of strength. And although we are very concerned about how long this crisis will last, because as the time goes on, our strength will be eroded. Thank you.
Minister Mulyani, of course, we have to take a look at oil surging as much as $139 a barrel. Some say 185, 200 may be coming. If local fuel prices are not raised, Pertamina is expected to book losses of as much as $500 million. Do you think there's a need to raise prices? And if so, how big an increase are you looking at?
Well, first, we have to really look at not only one commodity. As I said earlier, within the context of navigating and managing this recovery process, we will use all tools as well as source of uncertainty that potentially threatening the recovery process. Fuel, electricity definitely will have the implication due to the oil, gas increase, even coal price, which is creating a cost pressure on the cost of the electricity as well as fuel in Indonesia. We have calculating, of course, with some scenario, if you are not going to be able to pass through all those pressure to the consumer, what does it mean in terms of the subsidy or compensation that we have to pay for the Pertamina as well as even PLN? And that's definitely will contribute to the increasing spending. But as I said, the third year of the pandemic, actually this year, we still have around 450 trillion of what we call it recovery fund. And we are going to use this recovery fund first, of course, to still continue supporting on the health spending, which is still very important. We want to achieve 70% of vaccination and even providing booster so that the pandemic or the COVID is not going to create uncertainty on this recovery process. Second one, we provide social protection, additional cushion because of the increasing price of commodity that will then affecting the purchasing power, especially for the vulnerable household, just like my colleague, Minister Dominguez mentioned. We are providing additional cushion on social spending. The third one is, of course, we are going to then decide what administered price that can be then adjusted with this kind of changing global environment. Will be very selective, will be very measured, will be also in this case looking at our own strength of the recovery, but also at the same time, we have to be committed to the consolidation of our fiscal. So the combination of the commitment to reduce the deficit below 3% next year on the one hand, and on the other hand, we are going to make sure that the recovery will be actually built on a strong foundation and the ability to cushion the shock, which is mainly coming from the external. Right. These three combinations that we are now managing, and I think so far until this March, our ability to do those triple objective is relatively on track. So we will have the ability in terms of managing our fiscal pressure, providing support in terms of both subsidy, direct or indirect to the commodity, and at the same time also making sure that the recovery is going to be in a firm ground.
We've been talking about Ukraine and the sanctions on Russia. What do you make of the consequences of US sanctions on Russia's central bank, which effectively cancels its reserves? Would that encourage you to diversify your own reserves, Secretary Dominguez? Well,
you know, we're very concerned about sanctions, because they eventually will affect us. We are not directly affected, but, it's like a ricocheting bullet. Sometimes we get hit. On the sanctions on the Central Bank of Russia, we actually will have no effect on us since our trade relations with Russia are quite limited, and same with the Ukraine. But this will certainly affect world trade, continue the disruption that was started during the pandemic of logistics and the ease of doing business, particularly in Europe. We are concerned that there might be a effect on the vigorousness of the economies in Western Europe and the United States, who are our big trading partners. So, we are concerned. We are not directly affected by these sanctions, but we are quite concerned on the effects on the overall world economy.
Minister Shri Mulyani, might you do more business in other currencies, say the yuan? There's been greater demand for the Chinese currency.
Well, first, I think what is happening in Ukraine definitely creating a new sense for all policymakers in the world, whether we are going to face a totally new world order. Globalization has definitely become one of the most important victims of this conflict, because then people don't trust the global supply chains with some uncertainty coming, whether from the military operation or other sanctions which can be imposed. And that is one of the most important setback for the global economy. As we are witnessing in the past 3 or even 4 decades, many countries, especially emerging and developing countries, they were able to reduce poverty, to increase prosperity, because they are linked to the global economy through trade, through investment. With this conflict, when then there is uncertainty regarding the security of this system, definitely will affect the change as well as the implication on the strategy for growth in each country. As of, I think, the ability to diversify of the currency in Indonesia since 97-98, after the financial crisis in Asia, including Indonesia, as well as the global financial crisis, we also, in this case, within ASEAN, we've already, Bank Indonesia and some central bank in ASEAN has already also initiated using the local currency for our trade relation. That's also including with the China. But if you look at the percentage, it's still relatively insignificant. So whether this global order will be changed radically and permanently, this is really something that need to be watched. And of course, within the context, for example, like G20 and economic cooperation, we do want the world to come back to the cooperation spirit, because only through this kind of cooperation that all countries will have the opportunity to improve and increase the prosperity of their people, and also to achieve progress in their economy. So we do hope that this kind of situation can be restored.
I'd like to touch on your fundraising plans. Secretary Dominguez, any update on plans to sell at least $500 million of ESG bonds? Will you push through with it?
Well, we are evaluating the market at the moment. As you know, the market is very volatile, and we are taking a very, very close look at the issuance of our green bonds, which is in the pipeline. We have not yet made a final decision on that, but we are going to be ready as soon as the market conditions, how would you say, improve or stabilize.
What are the offshore bond markets will the government consider tapping in the first half, or at least before you step down as finance secretary?
I beg your pardon again?
What other offshore bond markets will you consider tapping before you step down as finance secretary?
Definitely we're looking at the samurai market. But basically, we rely on our domestic market to the extent of 70 or 72% of our bond financing. The foreign financing is just less than 30% of our total package. And in the meantime, we have been really developing our local capital markets together with the support of the monetary policies in reducing the reserve requirements of our banks here. So again, we look at both markets, but depend more on our domestic peso bond markets.
It is a risk-off sentiment. Minister Mulyani, are you concerned about the appetite for Indonesian bonds?
Well, so far, of course, Indonesia enjoy, as I said, 2021 end of the fiscal year was actually in a very good result. And we have what you call it cash surplus to start our fiscal year 2022. Within the context of financing our deficit, I think the option domestic and foreign is still very open. As of now, we rely on a domestic market, as also Minister Dominguez mentioned, that the ability to actually issue domestic bonds, especially because the role of the foreign buyer has been declined sharply into only 19%. So we are deepening our bond market domestically, and that's also creating a much more stable. And combined with our external balance, which is strong, that's also creating a domestic local currency denomination bonds, which actually the spread to the US dollar bonds at 10 years is narrowing. It's actually not widening. So the increase of the yield since the crisis in Ukraine is actually quite limited if you compare with many other countries, emerging countries. So we are actually still continue enjoying first, of course, the cash surplus that we are having. And second one, domestic market deepening on the bonds market, especially government bonds market. The third one, we also at the same time still have what we call it the arrangement with central bank. We have 3 years arrangement with central bank, Bank Indonesia, on first that they are playing as a standby buyer on the primary market, and at the same time, the direct primary placement, which is related to our spending on both health and social spending. This is providing us with a cushion around 244 trillion. So this combination is actually provide us with the ability to maneuver, especially when the market, global market, foreign market is still in a very unfavorable like today. On the same time, we also still can rely on other alternatives, like, for example, the samurai bond mentioned by Minister Dominguez, and also policy loans coming from multilateral development bank. So these are all providing us with choices, but we are very mindful that this kind of situation definitely need to be maintained and managed very carefully, because there is always a limit. But at the same time, today we are enjoying quite choices that is available for the government to choose in terms of financing of our deficit. Last note, of course, because our expected deficit is going to be declined quite significantly, that's also providing us with a much less pressure on the financing side.
And just like that, our 25 minutes are up. Indonesia's Finance Minister, Sri Mulyani Indrawati, and Philippine Finance Secretary, Carlos Dominguez, I thank you so much for your insights today. Thank you for your time.
Thank you for having us.
Thank you.